Hello and welcome to another video. Today I'll be going over my M1 Finance portfolio, just giving another update. My balance is at $1,467.58. Right now I'm down on my portfolio. I'm down 0.73%. I'm down negative $7.87. It's actually more. It's actually $12.09. But because of my earned dividends, which I earn two more dollars in dividends. My last video I had only in my last video I had only earned $2. Now I'm at 4.22. So those dividends are coming in. Well, right now they're earned. I haven't received them yet. I should be expecting those. I don't know, sometime soon. Anyway, right now the ones that have been getting hit the most has been my dividends pie, and then the dividends aristocrats actually this week did not perform that well, but that's okay. It's just down a 0.54%, so it's not that much. My growth and value stocks are actually doing pretty good. You can see here in my Facebook, Microsoft, Apple, Google, all of them are doing great. Tesla, of course. I'm sure most people heard the news that Elon Musk got the SEC was seeking some kind of trying to prosecute him for some fraud, and that really did bring down my position. But my position's not that big, as you can see here. It's only $8.62, not that much. Only 3% of my portfolio here, but I am down almost a dollar, which again is listen. It's not that big of a deal. I know Elon already settled the case, or he's gonna settle out of court. He's gonna step down as the chairman. He'll still be the CEO, and I think the article I read said that he cannot be the chairman for 3 years, but after 3 years, I think he can take a position as the chairman and as a board member. But who cares? That's fine. And I'll keep investing in Tesla as long as Elon is in the company, because really that's the only reason I'm investing in it, because of Elon Musk and his vision. Really, had he been kicked out of the company or something like that, I would have definitely liquidated my position in Tesla. But yeah, and then also Home Depot and FedEx and UPS, they're still getting hit. I'm still down in my position, but again, those positions aren't that big, um, so it's okay. I'll just let it go. Also, like I said, but the one that been hit the hardest has been my dividends over here, and I got like a couple of REITs in my account, like the two Harvest Investment Corp, O Realty Corp, and then which one's the other one? Main Street Capital. I think that's another REIT that I have here. So they've been getting hit, especially with the interest rates and all that stuff that the Fed is raising, and since they have to do a lot with real estate, that actually affects them a lot. So whatever. I mean, I guess that's the negative thing about the Fed raising up the interest rates, which means banks and can get money from the Federal Reserve as cheap as they used to. Now they're getting charged a higher interest. But anyway, but that's some. I wanted to take that as a opportunity to talk about something that I don't. Well, I haven't really talked about it in the video, and that is taking advantage of that recent interest rate hike that happened. And I know there's more interest. There's more interest hikes that are coming soon. This year, one more, and then I think like three more next year. We just wanted to talk about taking advantage of the situation by opening an online savings account or a high yield savings account. If you haven't opened a high yield savings account online, I highly recommend it. Whenever I tell my friends, about investing or just recommend investing to them, I tell them, they should get an emergency fund first set up before you start investing, and that's general advice. A lot of people will give you the general advice to save at least like $1,000 in an emergency fund before you start investing, and that's what I did. I actually have an emergency fund. So before I started investing here in M1 Finance, I had an emergency fund set up. So I do have over $1,000 in that account, and that's just money that's just sitting there for emergencies and such, just liquid cash that I can access. And I just want to go over some of the accounts that I've seen online. I personally use Barclays. Barclays are actually pretty good. I opened this account. I actually opened this account a while back, maybe 2 years ago. No, almost 2 years ago. Back when they were paying 0.99%. That's the reason I opened it. So I just went ahead and opened it. I think I only had $100 for the longest time. Made a dollar when just made like a dollar the first year that I had it. But yeah, but right now their interest is that it just went up to 1.9%, which is actually I think is pretty good. And I use them. Now the only thing about them is that the money does take a little longer if you want to withdraw it. It takes around 3 to 5 days to actually go to your account, and you get a link, an external checking account. They don't have any checking or any card that you can use to withdraw it in an ATM. So I would say maybe for you that's a disadvantage. For me personally, I don't really mind. So that's just one. That's the one that I use. I mean, and I'm not endorsing any of these banks or really the one that I use. I'm just telling you that's what I use as my account. So and since I'm just gonna have those $1,000 just sitting there, might as well have them earn the most interest. Because if you have it in a traditional bank, you're hardly getting any interest. I mean, whatever the interest they pay is just it's a joke. I think they pay like 0.003%. I mean, so you're getting nothing for your money. And if you're already gonna have an emergency fund, might as well get the most out of it. So that's one of them. Other accounts that I seen as one of them's Ally. Now they pay 1.85. I'm guessing they're gonna raise theirs to 1.9 soon, since the interest rates went up. I'm guessing they will, and if they don't, I mean, 1.85 is still better than most banks. I think one of their advantages that they have is that they also offer a checking account, which you can link to your online savings account. And the checking account comes with a debit card, so obviously you can withdraw your money, and it's faster to transfer your money as opposed to my Barclays account, where it takes 3 to 5 days to transfer the money to my checking account. So I like another option you can use if you don't want to use Barclays, or use just something you can look for. And again, you should always do research on any account that you open. Another one here, Goldman Sachs actually offers another online savings account. Theirs is also 1.9%. It's called the Marcus by Goldman Sachs, and I think, as far as I know, they work the same way as the Barclays. You get a link an external checking account. But yeah, that's just another option you got there. Another one would be American Express. They also offer another savings account at 1.9%. I was actually gonna open one with them before I opened my Barclays account. I don't know why. Actually can't remember why I went with Barclays. Oh, I think at that time when I opened my account, they were offering like a small bonus, not a bonus, just the way they had their interest set up. It was you would get your interest, but if you didn't withdraw any money that year, you would get an extra 0.5% on your interest. So if you made I think I made $1 that year, they pay me 5% of my interest, which was 5 cents. So I just went with that because of that incentive. But yeah, that's just another option. And again, always do your research. Look up at all these accounts, and just be aware that you have to give them all the information that you would usually give a bank when you open a traditional savings and checking account. I know with my Barclays account, I had to send them a copy of my driver's license, and I believe a copy of my social security. So I mean, maybe if you're not comfortable with that, that's fine. And again, there's just an option to maximize your savings. Because again, I always recommend having $1,000, and it's not just me. I got this from other people, other investment channels, to get $1,000 before you start investing as an emergency fund. So, if you're gonna have your money just sitting there in a traditional bank and not getting interest, because I guarantee you that bank is actually gonna make money on your money when I get a piece of the action. When I get some interest back. So 1.9 is not too bad. There's other banks that actually I was reading online where there's some banks or different, I would say banks, whatever accounts that can pay you up to 5%, but you gotta do jump a lot of hoops, and I don't have time for that. So, but if if you want to look into that and you have the time for it, go for it. You can. I mean, there's certainly a way you can make 5% on your money. So, that's that. Really, and I don't have many more updates on my account. Hopefully this week my portfolio would perform better. I'll still deposit money on my account. I'll take this as a buying opportunity. Anytime my stocks are down, I just look at it as I can buy stocks on the discount. But anyway, that's all I got for today. Again, just down a little bit here on my account, which is not much really, just 0.773%, and I'm still getting some dividends, so that kind of makes up for it. Anyway, thank you for watching this video. If you liked it, give it a thumbs up. If you didn't like it, give me a thumbs down. Let me know why you liked it, why you didn't like it. Any checking accounts that you know out there that can pay a higher interest rate, or a way to, or you have a different way to take advantage of this interest hikes that from the Federal Reserve. Just let me know, leave it down in the comments, and I thank you for all you guys leaving comments in my videos and liking them. I'll definitely try to keep up the videos, and I thank you for watching. I'll see you in the next time.